Have you considered investing in the stock market but are not sure if stock investing is for you? One of our webinar speakers talked about investor personalities. Here are the questions to know what your investor personality is. How long have you been investing? What is your reason for investing? Will you be needing regular income from your investment? How much of your money can you invest over the long term? If the stock market went down by 20% in a year, what will you do? Give your answers the corresponding points, then add them all up. Once you have your score, check where you fall among these personality types. Now here's a clip of Ms. Marjorie May Arcilio of First Metro Securities Brokerage Corporation talking about investor personalities and the legitimate investments ideal for these personality types.
If you're more on the conservative or moderately conservative side, you're the type of investor who values peace of mind. So you wouldn't mind having lower returns for as long as you can probably sleep at night, knowing that your capital or your initial principal or your money is still intact. For the moderately aggressive and the aggressive type of investors, I'd like to call them fearless. So why did I say fearless? Because I think they feel like that these are just a momentary or these are just short-term fluctuations in the market. So they feel like they can withstand those momentary fluctuations in exchange for bigger opportunities for their capital to grow in the long term. But before anything else, I'd like us to familiarize ourselves with the legitimate investment options available in the country. So first up, we have our deposits. So these are actually our savings on our time deposits. Second is we have bonds. So these are forms of indebtedness by a corporation or a government to us. Third is we have stocks. So these are shares of ownership in a corporation. And lastly, we have others like real estate. So we have to understand that as we go further to the right, the risk increases. But if we are able to take on the higher level of risk, then there is also a higher potential return. So I'm actually not favoring one investment from another because ideally, we should have allocations in each of these investments depending on the time horizon of our purpose and of course our risk appetite.
If you want to watch the webinar featuring Ms. Arcilio, check the webinar playlist here in our Facebook page.